Hi, my name is Muhammad Syarif Amri bin Apandi from JBA 2422A. Okay, today I'm gonna talk about capital market. So, what is capital market? Capital market are venues where saving and investment are channeled between the supplier who have capital and those who are in need of capital. The entity that have include retail and institutional investor, while those who seek capital are business, government, and people. Capital market are composed of primary and secondary market. The most common capital market are the stock market and the bond market. Capital market seeks to improve transactional efficiency. This market bring those who hold capital and those seeking capital together and provide a place where entities can exchange securities. The term capital market broadly defines the place where various entities trade different financial instruments. This venue may include the stock market, the bond market, and the currency and foreign exchange market. Most markets are concentrated in major financial centers including New York, London, Singapore, and Hong Kong. Capital markets are composed of the supplier and user of funds. Suppliers include household and the institutions serving them, pension fund, life insurance companies, charitable foundation, and non-financial companies that generate cash beyond their need for investment. Users of funds include home and motor vehicle purchasers, non-financial companies, and government financing infrastructure investment and operating expense. Capital markets are used to sell financial products such as equity and debt security. Equities are stock which are ownership share in a company. Debt securities such as bonds are interest bearing. These markets are divided into two different categories. First is primary market, where new equities, stock and bond issues are sold to investors, and secondary market, which trade existing security. Capital markets are a crucial part of a functioning modern economy because they move money from the people who have it to those who need it for productive use. Capital markets are composed of primary and secondary market. The majority of modern primary and secondary market are computer-based electronic platform. Primary market are open to specific investors who buy a security directly from the issuing company. These securities are considered primary offering or initial public offering (IPO). When a company goes public, it sells its stock and bond to large-scale and institutional investors such as hedge fund and mutual fund. The secondary market, on the other hand, include venues overseen by a regulatory body like the Securities and Exchange Commission (SEC), where existing or already issued securities are traded between investors. Issuing companies do not have a part in the secondary market. The New York Stock Exchange and Nasdaq are examples of the secondary market. Stock and bond represent two different ways for an entity to raise money to fund or expand its operation. Stock are simply shares of individual company. When a company issues stock, it is selling a piece of itself in exchange for cash. A person who buys a stock is buying an actual share of the company, which makes them a partial owner, however small. It's why stock is also referred to as equity. This applies to both established company and initial public offering that are new to the market. The stock market is a similar design market for trading various kinds of security in a controlled, secure and managed environment. Since the stock market brings together hundreds of thousands of market participants who wish to buy and sell shares, it ensures fair pricing practice and transparency in transactions. While early stock market used to issue and deal in paper-based physical share certificate, the modern-day computer-aided stock market operates electronically. Along with long-term investor and short-term trader, there are many different types of players associated with the stock market. Each has a unique role, but many of the roles are intertwined and depend on each other to make the market run effectively. Stockbroker also known as registered representative in the US, are the licensed professional who buy and sell security on behalf of investor. The broker act as intermediaries between the stock exchange and the investor by buying and selling stock on the investor behalf. An account with a retail broker is need to gain access to the market. Portfolio managers are professionals who invest portfolio or collection of security for client. This manager get recommendation from analyze and make the buy or sell decision for the portfolio. Mutual fund company, hedge fund and pension plan use portfolio manager to make decision and set the investment strategy for the money they hold. Investment banker represent company in various capacities, such as private company that want to go public via an IPO or company that are involved in pending mergers and acquisition. They take care of the listing process in compliance with the regulatory requirement of the stock market. Bond, on the other hand, represent debt. When an entity issue a bond, it is issuing debt with the agreement to pay interest for the use of the money. A government, corporation or other entity that need to raise cash will borrow money in the public market and subsequently pay interest on that loan to investor. The bond market is broadly segmented into two different silos, the primary market and the secondary market. The primary market is frequently referred to as the new issue market, in which transactions strictly occur directly between the bond issuer and the bond buyer. In essence, the primary market deals to creation of brand new debt security that have not previously been offered to the public. In the secondary market, security that have already been sold in the primary market are then bought and sold at later date. Investor can purchase this bond from a broker who acts as an intermediary between the buying and selling parties. This secondary market issues may be packaged in the form of pension fund, mutual fund and life insurance policy, among many other product structure. That's all. Thank you.